Understanding currency pairs and timeframes. So really important video in the course. So everything works in pairs in forex. You can't buy something without a second currency. It's like, for instance, when you buy a car, you're buying that car for $50,000. Well, how much does that car cost? It's $50,000. You need to put a currency behind it. You can't say it costs 100,000, 100,000 what? We need a currency. And it's exactly the same for forex. So in that instance, if you want to buy this, which is the euro dollar, you'll basically want to buy euros. And how do you buy it? You buy euros with dollars. So you're buying euros and selling your dollars. If that makes sense. So when the price goes up, it's basically the euro which is going up. However, if the US dollar goes down, the pair would also go down because it works inverse. So if the euro goes up, price goes up. If euro goes down, price goes down. If US dollar goes up, price goes down. If US dollar goes down, price goes up. So, for instance here, the euro could have lost some value, or the US dollar could have put on a lot of value. And if it's a combination of both, it will make strong moves like that. And when we see, for instance, this happening here, you can see there's no real movement. It's just consolidating. That means the euro could be really strong, but the US dollar could be also really strong. So once against another, it's struggling to go somewhere. If we take another example and look at euro, let's change a bit. Aussie Swiss. So Aussie Swiss, we can see price here went down a lot, and it's either the Australian dollar crashed or the Swiss franc put on a lot of value, or either both. When we see some slow moves, slow moves, maybe this one, that could be the British pound is going down and the Australian dollar is also going down. So that means it should be flat. However, the British pound goes down more than the Australian dollar. So really important concept to understand. It's like the whole basis of trading, and many traders don't understand it. And you can't be profitable if you want to buy the Australian dollar and you see this Australian dollar and you go and buy this, because that means you're actually selling Australian dollars to buy British pounds. Okay, now time frame. Time frame is also a really important one that many traders get wrong. So we can see here on TradingView. So I've put some favorites. You can go ahead and do the same. So my favorites are the monthly, weekly, day, 12 hours, 8, 4. Well, you can read. So time frames. We can see the price is made of little. We call them candles. You can see one here, another one. When it goes down, it's red. When it goes up, it's blue. Okay. We'll see how they all work in the next video. So price works in candles, and each candle represents the time frame you've selected. So here we see I've selected daily. So each candle represents 1 day. So we could see here this little move took 4 days. 1, 2, 3, 4. If we go on to the 1 hour, each candle represents 1 hour of time. So really important to understand. Why? Because we can see on the 1 hour, so this move took 6 days to happen. So if we go on the daily, that should be 6 candles. 1, 2, 3, 4, 5, 6. You can see. And so that little move, if we want to zoom in, will basically go into a smaller time frame. So the 1 hour, for instance. If you want not so little time frame, you go to the 4 hours. And you see it's still that move. The daily, it's that move. When you look at the weekly, it will look really small, this. And the monthly, even bigger. So the monthly, you'll only look at it for a big time frame and as an idea of what's happening long term. However, I'm going to teach you how to trade from the 1 hour and the 4 hour sometimes the 8 to 12, but mainly these time frames because you're able to trade multiple trades. And because if you trade with a too low time frame, let's say 15 minutes, even worse, probably 5 minutes, people trade over 5 minutes. Each candle represents 5 minutes. So you can see you can have massive moves that can stop you out or make you lose a lot of money because it's like a big move. However, if you look at things, it was not that big. But basically, because you're trading so little time frame, everything looks huge, and it's really difficult to make consistent income out of trading. So I hope you understand this. Really important. Please take notes and see you next video.